uh remember last time, guys, we spoke about trading the patterns, and there is something that I elaborated, that it's not about line. It's not about the issue of lines. See, drawing lines and taking trades when the price hits that line. You see, the true patterns that we should be considering, it is the pattern of your mind, meaning your mindset. How is your mind behaving based on patterns? You see, that's what you should consider. How is your mind behaving? Your mind should be, I mean, your trading should rely mostly in your mindset compared to even the patterns that you see, because for the patterns to communicate to you, it requires your mind, it requires your mindset. You see, for an example, let's say this trade here, which means I tried to look at it in the free group. It means that I didn't post it. I posted it in the allied community. So looking at this trade here, where it was a buy. What do I do with this one? I lock it, or let me just delete it for now. Okay, where it was where I located a buy here, I say we should buy here. So looking here clearly, looking at price here, one can say it's not a good buying opportunity, and the question is, why should it not be a good buying opportunity? One can see that, okay, here we have a high and here we have another high, meaning we are having lower highs. So if it's a low high, it means that now the sellers are becoming weak, and one can say price didn't approach this significant level here. It went back up here, not from this level. Maybe some are saying we're going to buy when price approaches this level. So now there comes the difference. There are those who say, me, I'm waiting for price to come here, and some, like as I did that, okay, I bought it even before it approached there. Why? Because the main pattern, or my trading doesn't rely only on drawing a line down here and say I'm waiting for my price to hit this line, but mostly my trading depends on how I think. It depends on how I think as a trader, you see, because it is how you think that is going to influence the market. Remember, the market is also moved by thoughts. So people just decide that, okay, I'm going to invest a billion here, and they sell here with a billion and price goes up. It's all by a mindset. So we can think that as traders, we can think that it is patterns which drive the market. Unfortunately, it is not the patterns which drive the market, but the patterns, they are being produced from this machine. It is how this guy think that enable the market to behave the way it behave. So meaning the biggest guy here, it is him, not the patterns. The biggest deal here, it is him, not the patterns. You see, that's why no matter how fun the market can be in terms of price action or pure price action, even if it can be on a support level, it means that even if it can be on a support level, someone can just decide. For an example, the president, or maybe the banks or big institution, they can decide that, okay, despite the fact that the price here, maybe there can be conditions which will force the price to go even down, conditions which come from this thinking machine, you see. So yes, Richard, so what you need to know, guys, is that you are greater than patterns. Let me put it like that. You are greater than patterns, meaning patterns, they depend, or they rely on how you think as a trader. So what you need to know, remember, this is not just a normal guy, but this is a guy, this is the big boy. This is the guy who have all the billions with his beard here. So this is the guy who is the big boy. Remember, because it is not everyone who can move the market. It is those guys with a large amount of money. So it is this guy. So you remember, this is the guy who forms the 5% of those guys who are making money. So for you to be a creator of patterns, now you do not have to just watch patterns being formed. You also have to be part of the formation of the patterns, because it is different to trade a pattern when it is formed and to trade a pattern when it is still in formation. You see, so you need to be part of this guy. You need to be behind his back to make sure that you think the way he think, you approach the market the way he approaches it. A good example, guys, which I once told you, it is the issue of volume. And I told you that volume it shows us the money spot. If you don't want to use volume, you can use Bollinger Band squeeze. There is a strategy called Bollinger Band squeeze, but to me it acts the same as volume. You see, so I prefer volume. So volume, there is the money spot. So in the money spot, that's where this guy take his decision. That's where this guy take his decisions. In the money spot, where everyone is quiet, where everyone doesn't know what to do, that's where the guy take the lead. So now that's the difference between retail traders and the big investors, or the big boys, or the market makers. You see, that's the difference. That them, even when the market is silent, they are bold enough to say, okay, they don't know what they can do here. It's fine, I'm putting 10 billion, we are going up. You see, and you can see that this price volume is down, meaning there are non-transactions taking place. People, they don't know what to do. Price has been going up, and price have approached this significant level here. So now they are afraid, because this downtrend is a heavy trend. They don't know if this heavy guy who took the price up there is going to push the price all the way down. So everyone at this phase of the market, they stay out. The volume is down, non-transactions are taking place. That's where this guy say, now it's my time. This is the money spot. If I don't take it now, I will not make money. Because if you do not take the price with this guy, if you do not buy the price with this guy, remember that you are going to buy the price here. And if you buy the price here, you are stopped out. Your stop loss is taken. You see, because you didn't buy the price at the money spot, where it was still silent, where it was still quiet. You see, same thing applies here. Price approach this level, this significant level. People were still scared because of this rapid fall. They thought that this guy is now dead. However, this silence, he also came back in, because this is his level, meaning this is his buying price. If this level is $200, meaning he is used to buy his head at $200. So when the head drops again and it becomes $200, he will buy more of his heads, because he is used in buying them at $200. So this is his level, this is his price. So in other words, we should look for trading opportunities when volume is very low. Yes, you see, when volume is low, you need to know that everyone is sitting aside. No one knows what is happening. Your grandmother doesn't know if it's a downtrend or it's an uptrend. Your mother doesn't know if it's going to go up. Your sister doesn't know if it's still going to go down. You see, so people, they are just waiting. And that's where the big boy act. That's where the big guys act, when everyone is silent, because that's where we will make money. That's where we will make money. You see, where people don't know what to do. And that's where patterns are now formed. That's where patterns are now formed from our actions, meaning the real deal here, it is not actually patterns, but the real deal, it is how you think. That's the fact, that is that's the concept that will generate patterns. So once you see drop in volume, once you see, I was just going to give you guys tips about volume. So there are two aspects about volume. There's volume spike and there is volume drop. You see, both these things are important. You see, both these things are important. You see, but the most important one, if you want to take entries, it is when volume is down. because obviously when volume is down, it is automatically going to spike. It is automatically going to spike. However, I want to just give you this. You see, volume, guys, it works best on not on currencies, but on like these indices like German 30, Nasdaq, Bitcoin, S&P 500. You see all those assets, but on currencies, because currencies in reality they didn't have volume, you see. So they then helped us, and they generated this indicator for volume. So but when it comes to these indices, this volume, it is real. That's why in currencies you'll find that the volume, it looks more like uniform like this. But if you can open maybe Bitcoin, let me just check, where is Bitcoin? You'll find that, you see how the volume is. There is a clear, when there is a spike, for an example here, the spike, it stands out. You see, the spike, it stands out, you see. And I hope you guys, you took this trade, and I hope you are making money, unless you are student who do not listen. I heard someone calling a student like that, students who listen and students who don't listen. So I hope you took this trade. Where is this chart, man? So we're opening the 1 hour. So yeah, guys, I'm just giving you guys the mindset that you need to have. You see, let me just share this thing. There is something that I to be honest, there is something that I regret. Yeah, there is something that I regret, which I did, and which attracted the wrong people into my my business or what. So more especially when I allowed to give people signals for boom and crash, signals for synthetic indices. Yeah, that's where I did the mistake, because people who I was just studying the people who come to me seeking for help, mentorship, what. Mostly those guys who like trading indices, or even Nasdaq. When someone just come in my inbox and say, hey, me, I trade only Nasdaq and V75, I don't want anything. Those people, it is usually the guys who are stubborn and who do not want anything apart from money. What they want in the market, it is money. They don't want knowledge. They don't want anything. It is just money. Only signals. Give us signals. It is done. What is the name of the indicator? Does it to volatility? It is just volume. It is volume. It is not an indicator. So guys, yeah, it's an indicator, man, but it's not a fancy indicator. It's an indicator you can find anywhere. Yeah, it works, but you guys who are trading indices, I also trade indices, but I really need you guys to have that mindset of taking forex as a career. Taking forex as a career. Let it not be something that will just looking forward to make money today. You buy a Ferrari tomorrow, it's done. Just build that that thing like a business. Develop your trading like a business. Just be in love with it, because the more you focus on money, it is the more the money disappears, and it is the more you are depressed, it is the more you are discouraged. So I want to urge you guys, just focus on enjoying trading. Just enjoy trading. You see, it's nice to analyze. It's nice to just follow up what is happening with the price. What are the news telling you? So this is what I want you guys to do. Just forget about money. Just focus in developing this thing as your career. Because if you will be in love, for an example, with signals, although a lot of people think that I discourage something that I provide, for the fact to show that I am not after man, I will discourage it. So because if you provide signals, you will take signals until when? Until you die. Even if when you are 60, you'll still be paying boys for signals. So it's not a good plan, guys. Let us just seek the knowledge and let us enjoy this game. Okay, so let us continue. Let's continue. So yeah, that's how you should go about with volume. That's how you should go about with volume. Let me show you the other. Yes, good, Richard. Let me show you the other thing. The Bollinger Band squeeze. Where are the Bollinger Bands here? Okay, the other strategy that you can use, guys, it is my chart. What is it doing? Provider. Right about signals. If the signal provider is nowhere, what happens to your trading? Yeah, you are not learning anything, and it's hard to be successful, guys, if you are used to signals. It's hard. Me, I can tell you the truth. In my entire trading career, I never ever paid for any signals. Or it's the fact that I was in love with this thing. I wanted to trade on my own. So here is an example of a Bollinger Band squeeze, guys. When the Bollinger Bands, they squeeze together, they give something more similar to volume flow, to volume fall. When the volume falls, you see, it means that there is no much action. It means that everyone is sitting down. The market is not that volatile. However, at any point in time, the market will collapse, as it did here. It moved all the way up, you see. So that's how Bollinger Band squeeze also works. So some people can really love to use the Bollinger Bands to check Bollinger Band squeeze. Some people can love to check the volume, you see. So but it all work in a similar way, but I prefer volume in most of the cases, you see. But you can combine. This will help you, even you guys who are using the Bollinger Band strategy on trading indices. It will also help you guys this thing, because now you know that when the Bollinger Band squeeze, you know that something is about to happen. And in most cases, guys, when let me just elaborate this. When the Bollinger Band squeeze, like let's say they come together like this, when price move in between, you need to know that when the side which a breakout will happen, the price might move more candles. For example, if it break the Bollinger Band upward, it might continue to move a bit upwards. Like it can continue to move outside the Bollinger Band and then come in again, you see. So after a Bollinger Band squeeze, you can also check for where is the breakout happening, and you take those small pips like that. I hope it's making sense. I just deleted the wrong indicator. Okay. Where happens to your trading? Okay. Any question before I continue? Anyone with a question? I don't want. The problem is that when I say ask question, you find that we no longer have time. Can you elaborate clearly on the Bollinger Band strategy? Okay, I will do it. Any other question, guys? I want to see which question I will start with. If you have a question, this is your opportunity to ask. This is your opportunity to ask. And guys, you can join the community, guys. I gave you a special offer. 2 months, $30. We'll be doing analytical videos, educational videos like these frequently. So imagine for 2 months we are meeting like this 3-4 times a week. You are receiving daily analysis, you are receiving those signals that you love and everything. What man, please indicate a current low on your chart. Please, man, I just came in now. What is the name of this indicator currently in your chart. So guys, okay, so I can see that, okay, a lot of, or half of this of the group, it is beginners, and others, they are traders with knowledge. Guys, it is volume. This is just volume indicator, just volume only. And this is the moving average, this thing that is shading down there. It's a moving average inside the volume indicator. So yeah, it's a moving average period 10, which comes down, come up, and everything. This is just a volume default settings. You once talked about how the price approaches the level matters most. How should it approach? Okay, let me just elaborate that one. I will then go to the first question. We are left with 10 minutes. Similar to the big guy you mentioned, edit is similar using the bank psychological round even numbers. Yes. Okay, so when it comes to price approaching a level, guys, let's say let me just make an example with the price. Let's say we have this significant level here. So what you should know is that it is not just a matter of price hitting this zone here, this bias territory. It is not about price approaching this bias territory and you think that it's a buy. You see, the thing that you should have in mind, as I spoke last time, that it is the question, how is price approaching? You see, it's just like guys, seeing a car coming towards what are these, zebra crossing. You see, let's say they are zebra crossing. It's not about the car approaching that zebra crossing, meaning the car won't just stop because it has approached this zebra crossing. But the question is, how is the car approaching that area? Is it approaching that area decreasing in acceleration, or it is still going in full speed? You can be bold and say it is our right to use this zebra crossing, and yet the car is coming in a high speed. So the car won't care that it's your right. It will hit you. You see, so the thing that you should know is that how is it approaching? Is it slowing down? Because that's a significant level. That's an important level. We are expecting the car to stop. We are expecting the price to stop and return. But the question is the price on high speed, or is the price slowing down? And you know, even when you approach zebra crossing, you do not just cross unless there are traffic lights. Even in traffic lights, you do not cross without focusing the cars. What are they doing? You are bold when the cars slow down or when the car stops. Then you are bold to cross. You see, even same thing applies here. You will be bold to look for a buying opportunity when price begin to slow down here, showing signs of this in transition phase, which I told you about, where there is a volume fall, the money spot. You see, so I hope it's making sense. I hope I made a good example. And then the first question is he said, let me elaborate about the Bollinger Band strategy. So people, they are coming in while we are left with 7 minutes. Okay, the reason I wanted to end with that one is just that a lot of people know it, so never wanted to spoil them. So but I hope it's making sense, guys. Let us look at the speed, meaning the momentum of the price. Let us be excited when we see price slowing down, and then we look for an opportunity. So let me put the Bollinger Bands back. Wrong spelling. Any other question, guys, as I'm busy with this? Any question? Let me just do the settings here. Oh yeah. Okay, so yeah, those who know the strategy, it will be a bonus to them. Does the volume type matters? Buyers, sellers when it falls? Yeah, the red bars are for sellers. It is the amount of transactions. It is the transactions of the sellers, and the green bars, it is of the buyers. But it is just like the price. You see, it's just like the price. It is red and green, but we don't focus on the colors. We just focus on how the waves are formed. So even same thing applies there. You cannot just say, okay, I'm seeing but if you see a long red bar, it means that there is too much buying pressure. I mean, there's too much selling pressure. If it's a long green bar, it's buying pressure. I hope it's making sense. So okay, here the Bollinger Band strategy, it is I posted it as a scalping strategy on synthetic indices, where you use it with the stochastic, meaning we use the Bollinger Band, meaning we use the price bridge. When price bridges the Bollinger Band, for an example, it bridges it like here outwardly and even here. So meaning when price bridges the Bollinger Band outward, you are looking for a selling opportunity, but it is this guy who's going to tell you that sell now. You see, meaning here it was a good selling opportunity because the stochastic, it crossed on the overbought zone, meaning it was a good trade to take here as a sell. You see, and here price bridged the Bollinger Band from here, but this guy didn't confirm yet. It confirmed only from here, where it then began to cross when price was there, meaning it was a good sell only at that level because this guy confirmed after price breached the Bollinger Band. I hope it's making sense. It's just a simple good strategy. Simple good strategy. Another, the secret about trading it is make sure that you apply all the rules of a particular strategy. Even here, we can see price breached the Bollinger Band outward, and the guy gave us a confirmation, meaning it was a good buying signal here. I hope it's making sense, guys. Yeah, I will not explain more. The strategy is on my YouTube. Yeah, person can't speak. The strategy is on my YouTube, guys, and yeah, those who are willing to join the elite community, join, guys. It's mentorship, education, signals, everything. So the reason I'm doing this, I want to decrease my workload. I just want to do things together, not admitting people who want mentorship, admitting also people who want signals, paying also attention to people who want strategies. You see, people who want maybe some part of education if they are not purchasing the course. So I'm just bringing everything together. We are just going to be a community providing all signals, mentorship, education, the webinars, and then it will be courses, because I was now not resting. So I'm just putting down the workload. And go join, guys, for 2 months, only $30, and we will see after the 2 months if you have not tripled your account. I'm on a mission. I just want to triple my account in the 3 months. So I'll also be working with you guys who are joining. Let us triple those accounts. So yeah, thank you guys for joining. I love you all, and yeah, we will meet on Telegram. So thanks a lot, guys. I hope you enjoyed. I hope you were blessed. To us, it's a good night this side. So yeah, guys, thanks a lot. Yeah, thank you.